The UK housing market acts as a massive wealth transfer mechanism, so any changes in the average house price in the UK is regarded as very important. This is because for most people, their biggest asset is their property, and so their net worth is inextricably linked to the housing market. Anyone that doesn't have the benefit of owning a property, they don't have this impact. So housing prices can go up and they don't have any net worth increases. Whereas families and individuals that own property, they will get richer relative to those others that don't have the property. The UK housing market has been going up since Q2 2009, and this has prompted a lot of people to wonder if the housing market is overbought and potentially due a correction, or whether we're in a bubble. A really important question then is, can the housing market sustain its current price levels, or could it push even higher? The answer is yes. And the reason behind that is because UK property is actually very cheap. There's two ways of looking at this. The first is that housing prices are trading at record highs. The second, which I think we need to focus on, is that the pound sterling is the weakest it's ever been against UK property. And that's the focus of appraising this housing market. It's safe to say that most people are aware of what happened in 2008, the housing crisis across the West. So property prices crashed briefly and recovered in 2009. But when you look at the house in 2004, and it has not gone back to that same level of high valuation in terms of value, and purchasing power from a sale of the property has actually been going down since. The UK property market is actually quite a depressed market when you adjust it for inflation. And when we adjust it for inflation, what we want to do is say, how many ounces of gold does it take to buy that house? The reason why the housing price is going up so much is because the currency is going down. So the pound sterling is being debased. And what this means is that the pound sterling is becoming weaker, so it needs more of these pounds to buy the same property. The best way of knowing the true value of a housing market is to value it in gold, because this takes out the noise of currency debasement and the volatility in the forex markets. What we are going to do is look at this in the eyes of gold. How many ounces of gold does it take to buy a house, and how has this changed over time? Something very significant happened in Q4 2007, because in Q4 2007, that was the inflection point when house prices were going up in nominal terms, but they was actually, when priced in gold, they was declining quite rapidly. As of Q4 2024, the last time that the housing market was worth the amount of gold that it is now was 1985. It has not been this cheap valued in gold since Q1 1985. So anyone that's bought since then, 39 years ago, would be showing a paper loss if they were trading properties in gold instead of pound sterling. And this shows you just how much of an inflationary effect it is to see your currency debased. Currency debasement really distorts markets. If the housing market was in a perfect equilibrium of supply being equal to demand, the price would be flat. The price wouldn't change year on year because supply meets demand. Because we value houses in pounds, the supply and demand could be completely in equilibrium, but the price will go up or down depending on what the pound sterling is doing. In our case, the pound sterling has been severely devalued since the 1980s. So even if our housing market was in a perfect supply demand equilibrium point, the house prices would be going up because of the effect of the supply of pound sterling. When you look at a house price, you're looking at two things. You're looking at the product of supply and demand of houses, but also the product of supply and demand of sterling. And supply has been increasing significantly through the Bank of England's quantitative easing. At the end of 2024, it would take 128 ounces of gold to buy the typical average UK property. In Q1 1985, it took 125 ounces of gold to buy that same property. So if you bought the typical house in early 1985, you could have bought it for 125 ounces of gold. If you sold that at the end of 2024, you would have made 3 ounces of gold. That is how significant the debasement of currency is and why it's important when you're trying to determine if a market is in a bubble or it's a bargain. Convert that price to gold and see how that's changed. Because if we only go off of the sterling value, the nominal terms, that house in 1985, you could have bought that with £33,200. But now, in the end of 2024, it would take 268,500 to buy that same property. A massive increase. But when you convert that to gold and other hard assets, it's not much of an increase at all. It's important for people to understand this because this is the reason why we are collectively becoming much poorer in the UK, because we rely on the pound sterling. We trade time for money. And what is that money? It's pound sterling through salary payments. The pound is being debased along with the euro, the yen, the yuan, the US dollar, you name the currency, it's pretty much being debased over the recent decades. The fact is that this debasement is happening at quite a quick rate. We're seeing CPI inflation numbers, which is what the government tells us inflation is, which is normally understated. We normally get CPI increases month on month, anywhere between 0.1 and 0.5%. That means sterling is losing a tiny fraction each month. So if you get a pay rise in January, what you can buy with your wages, what you're paid into your bank in January, is more than what you can buy at the end of that year in December, because the salary that you are being given is in pound sterling, and that throughout the year is being debased. I mentioned that the housing market is a massive wealth transfer mechanism, and the reason for this is because your house is completely insulated from the effects of currency debasement. If the currency goes down, then your house price will just go up. And the more the currency goes down, the more your house price iterates higher. It's effectively insulating you from the effect of currency debasement. Investing in property has served a lot of people very well in getting them away from the effects of currency debasement. But property is not the only thing that you can buy to insulate yourself from the effects of currency debasement. You can also buy other assets, including shares and also gold, silver, and platinum. As I described earlier, the more the currency gets debased, the more the gold price will iterate higher. The same goes for silver and platinum as well. You're effectively putting your wealth into an asset that the government cannot print. The government can print pound sterling. We saw this in the pandemic. The central banks was basically increasing the money supply or currency supply, which meant that all the pound sterlings that's already out in the economy just got debased because now there's more pound sterling. And what that means is that the prices of assets go up. If you don't have assets, you don't get to have this impact and you don't get to see your net worth increase. It's all a bit of a mirage anyway, because it's all to do with your purchasing power. It doesn't really matter what your house price is worth. What matters is what can you exchange from the sale of that house. And as we've mentioned, since 1985, if you sell your property, you probably can't buy much more goods and services than you could when you sell the property at 2024 at the record high. So it's so important to understand and see beyond what the nominal price is of a market.